Good Wednesday afternoon to you. Welcome to the Jon Sanchez Show on News Talk KOH. Pleasure to be with you. Pleasure to be with my partner, Mr. Jason Gaunt. Happy post-Fed interest rate day, my friend.
Yeah, that's nice to see, Jerome Powell come to the marching orders and cut some rates and
Listen to the street again.
keep things going. It's nice to see some green on the screens.
Boy, did we have some green today, that's for sure. We're going to tell you, of course, everything you need to know about today's interest rate decision. And again, no surprise, we got the 0.25% cut. We've been telling you for probably close to a month now that it was going to happen. Unlike the chairman who at the October meeting said, "You're not going to give you a December rate cut." I mean, remember that? The market sold off significantly, I think over 400 points on the Dow side, if I remember correctly. But, the street started stomping their feet, Jay, and said, "Oh, no. We needed a 0.25% rate cut." And we got it today. But again, the most important thing that we will be sharing with you is what was said by the chairman during the press conference. Remember that press conference happens at 11:30. The Fed release is at 11 o'clock. We'll share with you, of course, exactly what the FOMC committee had to say about the economy, the markets, future interest rate cuts, et cetera. And also, very importantly, which was a little bit of fireworks today, who voted for what? I mean, it wasn't a slam dunk. It wasn't what's I was going to say, I guess a quorum. It was a quorum, but it wasn't everybody that...
It wasn't a unified response, that's for sure.
There you go. That better way to put it. Thank you very much. This cold's got my head clogged. Not a unified response by any means. There was a handful of dissenters. And, one guy that I really like a lot that we'll talk about, Austin Goolsbee. I know you like him a lot. He went against the crowd. I was very surprised of that. That's what makes a committee, right? Not everybody has to agree with the chairman.
It does, and it's a difficult situation to make that call right now. I think
it is.
You've got the economy that we're, at least for some period of time, we're lacking data. We've got a stock market that's at all-time highs or just right near it.
Mm-hmm.
Doesn't tend to be the place that the Fed is cutting interest rates, right? Or even continuing to, because they've already been cutting for some time. And you've got, like you've talked about a bunch of times, inflation is not at their target, right? And I've heard a comment earlier today that some think that the reason that the 10-year and even the forward curve has stayed as elevated as it has while short-term rates have come down is because could the new Fed lead start talking about a 3% target or maybe a 3 to 4% target, right? Because it does tend to
that
be
one before.
It tends to be growth focused, and versus saying that we want to strive for mediocrity and keep very, very little growth over time in order to keep prices constrained. So it's an easy time to be a dissenter or have a different opinion, even though quite possibly we're going to get a new Fed head come late spring anyway.
Well, not quite possibly. We will. It's a guarantee. It will not be Jerome Powell. We know that. Yeah, we know that. No, that's a great point that you bring up. And again, there is, the vote was actually 9-3, 9 voting in favor of the 0.25% rate cut, 3 obviously voting differently. Two of the 3 said, nope, I don't want to cut at all. And one, which of course is Trump's latest appointee, indicating that he wants his 0.5%, which he says that at every meeting. So if he's, Jason, I was thinking about this on a little fun joke side of things. Stephen Moran, that's his name.
He's a new
when Miss Moran was put on the FOMC, he's a hand-picked Trump, man. If he's any indication of what the next chairman is going to be, meaning, this guy calls for a 0.5% cut. Like I said, I think he's voted, 2 or 3 times now. He hasn't been there that long. If that's any indication of what Trump's picks, do, man, we could, be down to 0% interest if the next chairman follows suit of Mr. Moran. So I thought that was kind of funny. It's 0.5%. I want a half. And then, of course, Trump comes out. He was meeting with a bunch of tech executives today when the interest rate decision came out. Didn't take him long. And he came out and said, again, the Fed screwed up. They should have done a 0.5%. No making the president happy when it comes to interest rates. I don't know where he wants them, but yeah.
And there's always that common question of like, why are we noodling around with 25 bips? If there's something on the horizon, cut aggressively, and then on the flip side, raise aggressively if you need to, versus this soft sell with guidance and, all this, madness around what color tie is he wearing and how big is his briefcase. Like, just do it and then deal with it later. But all that being said is, even though it doesn't seem like a big number, it does tend to have a ripple effect, and it's more so the guidance than the actual cut that causes the economy to move over time. And again, it's sort of a more of a practitioner's versus a trader's mentality
Yes,
in terms of making those decisions. But
absolutely.
we'll see. It'll make things exciting.
Yeah. Oh boy, does it ever. That's for sure. All right. We're going to go through, and I apologize, Jason. I just came across this literally as the music was beginning of the show. And if you want to follow along with me, it's on CNBC.com. And it's a great summary of what Jason and I are going to go through. It's a great summary, and it's titled The 5 Big Takeaways of Today's Fed Interest Rate Decision. And I like this format they did. So I'm just going to follow right along because these were the notes that Jason and I were going to talk to you about, because once again, folks, it wasn't any surprise that we got the 0.25% cut. But as always, it's like, well, what's the Fed kind of thinking at this point? And again, if we go back to October, when Mr. Powell was definitely not in as good as mood as he was today, he seemed very jovial today. And, he was not in a good mood at that October meeting. And that's why the market sold off when he did his press conference, because he said, and I'm paraphrasing, don't count on us to give you a December interest rate cut. And lo and behold, of course, we get it today. So you never know what's really going to come out of the chairman's mouth when we're there. But one of the big takeaways, of course, is this hawkish versus dovish type of mentality. Now, Wall Street had been anticipating that the Fed was going to deliver, we'll call it somewhat of a strong dose of caution along with the cut, meaning that the bar was set high for additional easing. And that was definitely, Jason, one of the first takeaways of the meeting today was, okay, look at, and again, this was so bizarre because this should have been a sell-off comment from the chairman, or the market should have sold off on the chairman's comments that we think we're in a good spot. And I have the quote we'll go over later, but he basically thinks the economy is in a good spot right now where they don't need to be in a hurry for a January interest rate cut, right? He's got 3 more meetings before he's out the door. But he, essentially said, we're in a good spot right now. We don't really feel that we need to do any more at this point. And normally that would have sold the market off, but it did not happen today.
And that is because the market is taking what he says with a grain of salt, right? He's talking like he normally would, with the assumption that he's always going to be in that seat. And everybody knows, like we said earlier, there's going to be a new sheriff of some kind in town. So yeah, I completely agree. I think they're just going to take what he does and not what he says for the next 6 months. And I think that's the spot.
Absolutely. All right, let's go to the second takeaway of today, which is what we were touching on a moment ago, the 93 vote. Now, like I said, we had two that did not want an interest rate cut, and then one that wanted a 0.5%. So those are the 3 dissenters. But the bigger takeaway is 3 dissents. What many of you may not know, 3 dissents is actually a lot. Matter of fact, we have not had 3 dissenters in the Federal Open Market Committee, or what we call the FOMC, dating all the way back to September of 2019. And again, one of those no votes came from a very unexpected source. The gentleman I just mentioned a moment ago, Austin Goolsbee. He was one of the economic advisors back in the Obama administration, and pretty sharp guy. And he finally became a voting member this year. So he was one that dissented. And then Kansas City Fed President Jeffrey Schmidt, again, they both said, we should not do anything whatsoever. But a total of the 6 of the 19 participants at the meeting said they would not have voted for the cut, giving voice of soft dissents who think the easing has gone far enough. So that was another interesting one. And as you'll learn as we go through the show today, this was one of those meetings that this was the dot plot, right? This is where each member, all 19 members, now remember, you don't have 19 voting members. Those are 19 members of the FOMC. You have 12 that are the voting quorum of the 19. So again, a total of 6 of the 19 said they would have not voted for the cut, giving the voice of soft dissents. So, Jason, I think that's an interesting point. And remember, folks, the goal, of course, is for a Fed chairman or chairwoman is to convince the group to definitely be in the majority, obviously, for what he thinks needs to be done. So if he would have said, I don't want to cut rates at all at this meeting, then, the group, they can always vote on their own, as we've learned, but they should follow, the vast majority should follow what the chairman does. So this, again, was another negative that the market didn't even pay attention to. 6 of the 19, again, saying they wouldn't have voted for the cut. So I thought that was an interesting takeaway.
Yeah, it is. I mean, again, I think there's the reason that we've got 19 members is because we want 19 opinions, right? We don't want all the sycophants that are just following on whatever they say. And so they're all in different districts, like Goolsbee's in Chicago, I think. And you've got all these people in different spots in the country. You would think if they were doing it correctly, there'd always be, kind of to your point, more dissenters or have alternative views, because they should be voting not necessarily to go along, but to add value to the conversation. And there's so many different back and forth and so many economic items that you could say, that's inflationary still in my district, and rates aren't down, or I'm more of this type of an economist, supply side, and I would expect that this should be occurring now, which it is. It's a tough landscape with AI and inflation and political environment that we're in. I don't envy their position to be making that call, just given that it's not a really clear windshield at this point.
Yeah, it's not. As we always talk about too, Wall Street in general, I think, make such a big deal out of the whole scenario, right? Are we going to get a 0.25% cut? Are we not? In reality, it really doesn't matter, right? As you and I have said a million times, the bond traders are the ones that are going to move interest rates. This rate that the Fed cut, again, this is called the Fed funds rate. Remember, folks, it's the Fed funds rate. This is the rate that banks charge one another to borrow money overnight. That's all it is. Other rates generally will follow. They don't have to, but generally will follow what the Fed fund rate does. So you should see a little decline in your credit card and maybe some other type of loans out there. We didn't get any bump whatsoever or any help really in the mortgage side. The 30-year mortgage, I checked it today, it closed at 6.30%. That was down 5 basis points. Not a big move because, as Dwight mentioned yesterday, Jason, he said the 30-year mortgage was, I believe he said, at 6.13% just the day of the October interest rate cut. And here we are at 6.3. So that's, what we say all the time is the bond traders are going to do what they're going to do based upon what they feel is going on in the economy, where things are going, et cetera. They're the true movers of interest rates, not necessarily the Fed. So we always have to kind of keep that in mind. All right, so we're starting things off again with the 5 big takeaways of today's Fed interest rate decision. 0.25% cut, we know that. We're going to come back and talk a little bit about the dot plot, go into more details about that, because that's another little insight as to what each of the members of the FOMC are thinking. Let's turn it over to Kristen Snow. She's in the Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Jason Gaunt. All right, here's how we finished in this Fed interest rate decision day. Nice rally we got. A 7-point gain on the Dow, 1.05%. Closing level was 48,057. NASDAQ rose 700, I wish. 78 points, 0.33%. Finished there at 23,654. And the S&P up 46 points, 0.67%. Closing at 6,886. Russell 2000, the best percentage performer, Mr. Gaunt, your favorite index there. 1.32% gain on the Russell 2000, up 33 points. So nice one on that one. All right, on the commodity side, we lost about 74 cents on oil, 58.53 a barrel, $12.60 decline in gold, 4,224.70, 2 basis point loss on the 10-year Treasury at a yield close of 4.16. All right, so we're working our way through today's Fed interest rate decision. As we said, we got our 0.25% cut. It wasn't a unanimous type of vote. Again, we had 3 dissenters, 2 wanting 0.5%, and 1 saying no cuts whatsoever. 2 saying no cuts, and then 1 saying I want 0.5%. Again, the takeaway from the street was the Fed's in no hurry to give us a cut in the next meeting over in January. Now we're going to go to the third takeaway, which is what we call the dot plot. So again, this is where each individual member gets to basically put in their personal opinion where they think things are going to be in the future, as far as interest rates, as far as inflation, etc. So this was the other takeaway that was interesting, Jason. The median of the group indicating just 1 cut next year and 1 cut in 2027. Now, I went out on a limb yesterday. Dwight and I were talking about this, and I said, I am very confident we're going to see 2 to 3 cuts next year. And my rationale behind that, I'd love to get your perspective, is, again, as I said at the beginning of the show, we're going to get a handpicked gentleman in there from President Trump, and doggone well, he is going to have pressure on him to get rates lower. And so I think, okay, now the dot plot saying 1 cut next year, but I think with a little coercing of a new Federal Reserve chairman, I think 2 is, in my opinion, very, very doable. What about you?
I would agree with you. I think 2 next year, given the political landscape, it wouldn't surprise me. But with the 2-year Treasury where it's at, it implies there's 2 within the next year. So I think that lines up with 2 in 2026 and maybe something in 27. But
yeah, so
it'll depend on the data, right? If the data stays up and inflation seems like it's not coming down as fast as it needs to be, you could see some push into later in the year. But like you mentioned, there's political pressure regardless.
Yeah, boy, is there ever. All right, folks, here's a term we haven't had to use quite some time on this program, but it's back. Quantitative easing, QE, as we like to call it. They're not calling it that this time, but in reality, it is. What are we talking about? The Fed is back in the bond buying business, the shorter end of the curve, Jason's favorite point, the 2-year treasury. So here's what the Federal Reserve indicated today, or the FOMC. They're going to start buying back again starting this Friday. They're going to start buying short-term dated treasuries. Overnight funding market feeling the pressure. Central banks said they're going to buy $40 billion in short-term treasury bills as part of a monthly program aimed at stabilizing markets and keeping the Fed fund rates within its 0.25% range. The buying levels, they said, it's going to change, but again, they're going to start off with $40 billion a month, so it'll change. But some participants, of course, viewing the announcement as a stealth easing that is very positive, of course, for the stock market. So that one, I think, came as a great surprise. I did not see any Wall Street strategists predicting that QE was going to step back, but boy, did it ever.
Yeah, and we were talking after the announcement whether it's, they're announcing they're there for liquidity reasons, right? That's another Fed mandate, is to keep markets liquid, to keep currency liquid. So they could see some funding gaps of some kind on the horizon that they may need to step in and provide
Brought a lot up
liquidity.
about money markets too, and I didn't
Right.
quite
Yep.
understand the chairman's comments, but I thought for sure the market was going to sell. It almost made it sound like the money markets were a little bit on shaky grounds at that point, or at this point.
And this is what you've seen with the, back in the day when everyone was showing up at the Fed window. And there's some cyclicality to it for sure. But there's also been, the dollar's been, it's starting to chop around a little bit, the yen at very high levels. They keep a close eye on those things.
Yes,
And
they
if
do.
they
They've
need to step
talked about
in
it a lot
to
today.
add liquidity to the market, I think they're just stating that they are looking at it, if they are armed to do something, versus stating that they're more on the tightening side, which is liquidity removing. It would look even worse if they were pivoting. I think it's just a little bit of a nod to the bond nerds to say that's a concern of yours. We at least have the bazookas ready if we need to start to do something on the other side.
Right, right. All right, we'll wrap up again. As I said earlier, Mr. Powell was in a very good mood today, very upbeat in a number of his comments, also very upbeat about what the rest of the committee is thinking at this point. He said, quote, "We have an extraordinary economy." And now this was the second meeting, Jason, that he said this. He said that back, if I remember correctly, back in the October meeting, which I thought was quite unusual for a Fed chairman to be that bold, but he said it again today. Yep, we have an extraordinary economy. Again, he has 3 meetings left as the Fed chair. They also raised their outlook for 2026 GDP growth by 0.5%, bringing it to 2.3%, which is still kind of a lackluster GDP growth, but one that's not too hot, not too cold to tie in with struggling inflation.
Yeah, he knows he's got his retirement coming up in 5
Yes, he
months,
does.
and he's thinking, hey,
He's going to go make real money now.
make some plans, no doubt, right? He's going to go on some tours and make some blank money. The second letter's U. So it's
exactly. Yeah, I was touching on that on the show yesterday. Yeah, this is the time period he isn't one, and this is why I was Dwight and I were talking yesterday. Corey was off the show, and we are kind of joking around like he has no reason whatsoever to upset the apple cart at this point. Meaning, some surprise cut or some surprise increase or any negative comments about the economy, because he, again, if you missed the show yesterday, what I said, and take me to heart on this. These men and women that retire from the Fed and really any of the high ranking political figures in Washington, they want to retire with a positive, strong legacy, right? That's what it's all about for them. But you take someone like Chairman Powell, obviously he wants to leave with a strong legacy. But in reality, folks, again, he's going to step out. I'm sure he's already talking, I would not be surprised, behind the closed doors with various Wall Street firms. They're probably bidding who's going to, be able to hire him as an advisor or in some capacity. That's generally what happens. He's probably already talking to various publishers about book deals. He probably already has a PR person that's going to line him up to make the rounds for speeches. I mean, he will make, in my opinion, millions and millions and millions and millions of dollars his first year out of office, because he's done a very good job. Everybody likes him. And like I said, he has no rationale whatsoever to screw things up before he's out the gate in May. You agree?
I couldn't agree more.
Yep, perfect. All right, when we come back, we'll start off by reading you what the Fed actually said at the release of the Fed interest rate decision at 11 o'clock, then go into some further comments about Chairman Powell about where they think interest rates are going next year, the economy, a lot of talk about labor market. This is one of the, we'll call it one of the worrisome areas of the market right now is the labor market. Not doing too well, and definitely the chairman was concerned about that. Let's turn it over to Jack Saban. He's got news, traffic, and weather. Hello, Jack. Back to the Jon Sanchez Show on News Talk 780 KOH with Jason Gaunt. Once again, we finished very much on the upside today. 497-point gain on the Dow, 1.05%. NASDAQ rose 77 points, 0.33%. S&P up 46 points, 0.67%. All right, before we get to the FOMC press release that came out, again, right after the 11 o'clock hour. I do want to deviate just a little bit off the interest rate side of things. I think normally this would have garnered much more news had it not been a Fed day today. And what we're talking about is this. The United States seized a very, very large oil tanker off the coast of Venezuela. The president said, quote, and this happened, I think it was right in the middle of Chairman Powell's press conference. He said, the president said the following: "We just seized a tanker off the coast of Venezuela, a large tanker, very large. The largest one ever seized, actually."
Probably.
Of course, it's the largest.
Of course.
And probably the only one. But yeah, I just watched the video of it, of the, I'm sure they're Navy SEALs that took command of this. I don't think that was much of a challenge. They came in, via helicopter, etc. But, what the name of the tanker is called the Skipper. It's a Guyana flagged, very large crude carrier, what they call a VLC, that was loaded with, covertly, by the way, 1.1 million barrels of oil in mid-November. Now, the ship appeared to be headed for Cuba, though it has been stopped offshore of Venezuela since it was loaded. Attorney General Pam Bondi said later today that a seizure warrant for the crude oil tanker was executed by the FBI, the Homeland Security Department, Investigation Unit, and the U.S. Coast Guard with support of the Pentagon. The tanker, which transported oil from Venezuela and Iran, has been sanctioned by the U.S. for years due to its involvement in illicit oil shipping networks supporting foreign terrorist organizations. Seizure was conducted safely and securely, she added. Crude oil up about 70 cents, 58.95. That was at about 12.12. Early in the session when it closed, it finished up about 27 cents. Now, we know, of course, the president has escalated pressure on Venezuelan President Nicolas Maduro in recent weeks. President said Maduro's days are numbered in an interview with Politico that was published yesterday. He said he would not rule out a ground invasion of the South American nation. When asked yesterday, he says, I don't want to rule it out. I don't want to talk about it. We all know, of course, that we've seen a significant military buildup in the Caribbean, right off the coast of Venezuela. And something that's very interesting that I did not know until I was reading about this today. Venezuela, first of all, is the founding member of OPEC. Okay, big deal. But here's the important part. Venezuela has the largest proven oil reserves in the world. It exports 749,000 barrels per day. That's what they've averaged this year, with at least half of that going to China. And Venezuela exports 132,000 barrels per day to us here in the U.S. And so one analyst said shippers will likely be much more cautious and hesitant about loading Venezuela crude going forward. Oh, I bet they will. So we could see a spike up in oil prices if this thing escalates. Once again, I'll let your imagination wander, Jason, as far as what does this really mean? You and I were chatting off air. What does this really mean? Is this the first step to invasion of Venezuela or a coup attempt to get rid of Maduro? I mean, there's a million different scenarios there, but pretty significant. Again, this tanker had Venezuelan oil, but obviously it's not a Venezuelan ship. And so this would be an interesting situation. But like I said, I think it would have normally got a lot more attention had it not happened right in the middle of the Fed interest rate decision.
Yeah, absolutely. I mean, we're conjecturing is, you said China gets a bunch of oil from them. Is it a puzzle piece if, they do something to Taiwan, right? Like, right. Oh yeah, well, here's a bunch of oil you're not going to get.
Right.
So yeah, it's an ever evolving item, but I don't think Trump is, I think he holds tightly the fact that oil is down and gasoline prices are down.
Mm-hmm.
Have a tough time thinking he's trying to do something that's going to make oil prices go up.
Right. Yep. Good point. Well, we'll continue to follow it closely. All right. So let's get to the Federal Reserve press release that came out right at 11 o'clock and let you know what the group had to say today about the cut in interest rates. So here it is. Available indicators suggest that economic activity has been expanding at a moderate pace. Job gains have slowed this year, and the unemployment rate has edged up through September. More recent indicators are consistent with these developments. Inflation has moved up since earlier in the year and remains somewhat elevated. So let's stop right there. So they're saying inflation's up and remains elevated, and the jobs market is weakening, which, again, we're going to run out of time, but this was mentioned a lot by the chairman. That right there, Jason, doesn't sound like a recipe to cut interest rates.
It doesn't. It doesn't. That's the part that that's why you had so many dissenters and such stating that they wouldn't have voted. It's a nuanced picture for a Fed person.
There you go. The committee seeks to achieve maximum employment and inflation at the rate of 2%. Oh, we're a long ways away from that one. Over the longer term, uncertainty about the economic outlook remains elevated. The committee is attentive to the risks to both sides of its dual mandate and judges that downside risk to employment rose in recent months. In support of its goals and in light of the shift of balance of risk, the committee decided to lower the target range for the Fed funds rate by a quarter percentage point to between 3.5% to 3.75%. And considering the extent and timing of additional adjustments, so now he's talking about, or the group's talking about, what's going to happen in the future, and considering the extent and timing of additional adjustments to the target range for the Fed funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risk. That's cut and paste there. Committee strongly committed to supporting maximum employment and returning inflation to its 2% objective. In assessing the appropriate stance for monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that can impede the attainment of the committee's goal. The committee assessment will take into account a wide range of information, including readings on the labor market, inflation pressures and inflation expectations, and financial and international developments. The committee judges that the reserve balances have declined. Now we're going to get into the bond buying, the treasury buying. The committee judges that the reserve balance have declined to ample levels and will initiate purchases of shorter-term treasury securities as needed to maintain an ample supply of reserves on an ongoing basis. And then it goes into, again, the three individuals that dissented against the group. So, you can, like anything, Jason, you can look at it and you go, okay, we got some positives, we got some negatives in there. They're concerned about labor. We'll touch on that a little bit when we come back from break. But you got sticky inflation. Again, we're over 4% on inflation. They want 2%. We're so far away from it, but then you go into an interest rate cutting environment. You can turn this around. Again, this is a fun thing about talking about the Fed and go, well, wait a minute here. Maybe they see some additional problems lurking in the economy. Of course, they're not going to tell us that. And hence they want to get ahead of the curve by dropping interest rates now or continuing to drop rates on a ongoing basis. Right. That's the other takeaway of it.
I mean, the market votes, right? The S&P was up. Rates didn't freak out all that much. So I would argue it was in line with expectations. And now we wait to see what the data looks like.
Yeah, exactly. All right. Got a few more comments from the chairman when we come back. Let's wrap it up with Kristen Snow in the Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Jason Gaunt. As a reminder, if you missed any of our shows, please subscribe to our podcast. We're on YouTube. We're on iTunes, Spotify, all your favorite podcasting sites.
Yeah, send us a message, say comments, tell us what you like, tell us what you don't, good interactions in there.
I got a nasty comment today from someone off of YouTube.
Did you?
Yeah, I did.
What'd they say?
They were
paraphrase. You don't have to say use exact.
Yeah, she criticized me, when we do our Monday AI segments, and we've been so pro solopreneur, right? This is the new evolution, right? And she said, you guys are just painting this rosy picture. What you really should be warning your audience about are high payroll cost, high overhead, blah 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 blah. So I told Bailey, I said, please nicely respond to her and tell her that's the reason we're talking solopreneur. You don't have payroll, you don't have high overhead. Opposite of everything that we've talked about. So yeah, she bashed.
We're hoping you get rid of all that.
We're hoping to get rid of all that. And I said, yes. And, taxes.
We like to hear. We like opinions, whether we agree with them or not.
Right. And as far as the taxes, that's why you need Jason and I in your life, because we're very good at tax strategies and retirement plans and so on and so forth. So yeah, but anyways, no, I always appreciate it in all seriousness. I always appreciate those. But yeah, please check us on YouTube. Oh, my other daughter is waving at me through see, this is live video. Look at this.
Nice.
Got the whole family in the background there. Don't talk right now.
She's waving with a specific finger, so I don't know. She
really is. Yes, yeah. She's pointing that index finger to me.
Right. She's just pointing up. Yeah,
That's right. Pointing up. Number one, Dad. You're number one. Thank you, honey. I think you're number one too. Right back at you. All right, here, let's just wrap up with a couple comments that the chairman said today in the interest rate cut decision. He said, quote, "We're well positioned to wait and see how the economy evolves from here." So there's another bullish comment, Mr. Gaunt. And then we move things down to talking about the jobs market. He says, quote, I think you can say that the labor market has continued to cool gradually, maybe just a touch more gradually than we thought. Now, what was interesting in the FOMC release that I just read to you, they did remove a sentence basically that has been in there for quite some time. And that sentence is, I should say, where the Fed described the unemployment rate, which ticked up to 4.4%, by the way, in September from 4.1% earlier, as having, quote, remained low in its statement. So they removed that, meaning, yeah, we're starting to see some problems in unemployment. No kidding, we are. Let's see.
He did say that AI really wasn't, a big thing yet. Yeah, but
you know
was
what?
naive.
And not to disrespect the man, I love the man. I think he's done a great job. I think he's way off mark on that.
I agree. That was a naive statement.
Yeah, there you go. That's a great word. Very naive. And again, he, has not been the best prognosticator of future events, like, inflation is going to be transitory. And I mean, we could go on and on about the things that he has missed in his comments in regards to things that have happened in the economy where he said they weren't going to, or that they're not a problem, they've become a problem. But, one of the reporters in the press conference basically was talking to him like, we're all kind of confused on Wall Street about this whole situation from the standpoint. We got Challenger Gray showing, layoffs are at the highest level that we have seen since basically pre-pandemic. But yet we have the initial claims numbers each and every week that are showing that there's not an increase in initial claims numbers, meaning people filing for the state unemployment benefit for the first time. So we have a lot of conflicting data. Which one is right? And he's like, don't really know. And then to your point, and he said they're confused also. And then to your point, he was asked about AI and he's like, we're not seeing it really have much of an impact. He does mention that immigration, of course, with so many illegals being deported, that is having an impact. But I think, to your point, I think he's completely off base, not recognizing that AI is having an impact on the jobs picture. I really do.
I think it is affecting it. I don't think it is necessarily creating a massive spike in unemployment. It's more so just affecting hiring in general, like we've talked about. I think companies are more so just waiting to see versus
that's right,
getting rid of people now.
When someone quits, they're not hiring anybody, but they're not laying them off.
Exactly.
You got it. Kind of the wait and see attitude. All right, you're going to have to wait and see what tomorrow holds, because we'll be back with you tomorrow on the Jon Sanchez Show. Have a great afternoon. God bless. See you, Jim.
Jon Sanchez is a registered investment advisor, and the opinions expressed by Sanchez Gaunt Capital Management, LLC on this show are their own and do not reflect the opinions of News Talk 780 or its parent company, Cumulus Media. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance.